What is going on, ladies and gentlemen? Today we are going to be talking about how to predict how much a stock is going to move in a certain amount of time. And you might be wondering how you're able to do this, and you're actually going to use the options chain. You can do this on any platform. It just takes a little bit of simple math. But essentially, you yourself, you're not going to predict where the stock's going to go. You're actually going to use the market maker and the options prices to predict how far a stock is going to move. We can take a look at this January 24th expiration date, and we can go in here to the at the money contracts, which SPY is trading at $331. We can add this 112 contract, which is right at the money on the call side, and then we can add this put contract that is $102. They're both right at the money, and then you add those together, and that's the predicted move, which it says right here, $2.11, which it's pretty close. This is stating a $2.24 move, so it's not like completely accurate. But if you didn't have Thinkorswim, you would have a rough estimate of how much the market thinks the stock is going to move. And here, the January 22nd, these ended today, but before the day ended, these were at about a $2 move as well. So that's about $1 both sides. And then if we go and look at the SPY today, the SPY opened at 332.2, and then it moved to 331. So if you do that math, is 332.27 to 331.39. That's pretty close to $1 move on the downside, even though it did gap up in the morning and then it fell down. That's still about $1 move on one side. So the market maker was correct in this case, saying that it could either move $1 each way or $2 one way. It moved the $1, and then as you can tell, after hours as well, it moved even farther down. Bottom of the morning was about 332.0, and it's still dropping in after hours, so maybe that $2 move is going to be more accurate. Jeez, this is crazy. It's just kind of crazy how accurate the market maker is. We can also take a look at this Texas Instruments one. This doesn't have 2-day expirations, but if we look at the week contract on Texas Instruments, it's predicting about a $7 move. We can go into the chain and add those together. We got the 266 plus 490. That's a $6.56 move, I believe. So divide that in half. That's about a $3.30 move each way. You can check out Texas Instruments this week. Texas Instruments was started at 129 this week, and then the earnings hit, and it moved up to 135.7, but it's all the way back down here. I think it's actually, where is it? It's actually at 331. So the expected move did hit, but it just came back down because the earnings wasn't the way that the market thought it was going to be. But this can also continue on tomorrow. It could either skyrocket up in the morning or skyrocket down. You never know. But the market maker in this scenario did predict that within the week. 129 to 136, is that what it hit? Whatever, 135.7. That's still about a $650 move. So yeah, and we can also do this on Robinhood. We can go to Robinhood. It doesn't give us like the predicted move handed to us, but let's go to Texas Instruments again on here. We can go into the options chain. The call side was predicting $404.25. The put side was predicting $235. So what is that? That's $680. I believe a $680 move. And as you can see, Texas Instruments was, down here in the 129s at the beginning of the week. And then it shot up to 135.56. Where was the bottom here? So that's about a $6 move. It's not a $7 move, but that's still pretty close. That's pretty accurate. And then during the earnings, after hours, it shot up even higher, but then it just came back down. So the market maker did predict that this was going to happen, but earnings kind of dropped the stock. The market didn't like the earnings. There's a lot of variations that go on when earnings plays are involved, but that's really the main reason why you would even want to know how much a stock is going to move in a day, because if the market is predicting a huge move, you'll be able to take advantage with maybe like an iron condor if you don't think it's going to move, or maybe you can snake a call and a put for pretty cheap, fairly close to where the market thinks it's going to go, and that can hit pretty easily, especially on earnings, because anything can happen during earnings. Stocks can drop, 10, 20, 30, $40 in one day, which is insane, and then they can still have continuation, so they can drop another $10, $20 or go up another $10, $20. Earnings are just crazy, but if you use the market maker to your advantage, it can help you make a lot more strategic plays instead of just blindly going into an earnings play and not really knowing what's going to happen. So I hope this kind of makes sense for you guys. It's just really simple math. All you got to do is add the at-the-money contracts on the call and the put side together, and that'll tell you the expected range for both sides. You can divide it in half, and that's what the market expects on one side. But overall, usually if it's an earnings play, it's going to move that much in one direction. So just be really aware of that. But if you guys have any questions, leave them in the comments below. I hope you guys enjoyed this video. Be sure to leave a like on the video. Be sure to subscribe to the channel. Be sure to check us out live. We're live Monday through Friday, market open to market close. And I'll see you guys in the next video.